Good morning, everyone, and welcome to the Quantum Leap morning market analysis and trade plan setup for October the 1st, 2013. It is Tuesday. I'm sorry for the delay. I was just trying to get my gold long. Anybody that knows that, where I've been looking to get long, it was at the 1298.90. Took my first attempt and second attempt and got funded on both, but still a little bit jumpy down here, so I'll have to keep an eye on it, but I will be getting into a swing position for a move that hopefully will take us back up to 1388. Anyway, if you're new to or visiting Quantum Leap, my name's Doug McKay. I'm a trader out of Canada. We've been running a private Skype room, Quantum Leap, which is a self-organized learning environment, for about 4 years now. If you're interested in checking the room out, you will need a Skype account. It is a 24-hour chat room, and each morning we come together here to do our market analysis and daily trade plan setup. And you can send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. And then we've got lots to go through, and I am running late, so let's get the disclaimer out of the way. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves a risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades you see in Quantum Leap are for education purposes. Please trade your own plan and do your own due diligence. Okay, so let's get right to the numbers. If you're watching this on YouTube or after the fact, each morning we create a morning routine and we start with the numbers. And so you might want to skip ahead. We don't skip this routine because it gets us into the process of trading. So the first thing we do is look at the macro to the micro numbers. So our year high, 1726.75. We're nowhere near our year low. We opened up last month at 1640 and a quarter. We had the all-time high at 1726.75 and a month low of 1630.75. And this is the flip day, so I'm not going to go over the previous month because they won't show up, or our month open this month will show up in tomorrow's numbers. Our week opened on Sunday at 1675. We have a high of 1681. We have a low of 66.75. Our previous week opened 1706.50, high of 1707.50, and a low of 1680, and a close of 1685 and a quarter. Quarters don't change. They flip on this month, so I'm not going to go over it. Our intraday numbers, so yesterday intraday we opened 1675. We had a Globex high of 1676 and a quarter, a Globex low of 1669.50, and we opened in the RTH outer range at 1670. You can see that we, other than these higher Globex opens and highs, we've been trending down for the last 7 days. And our open type was definitely open option out of range. We had about a 14-point gap thereabouts yesterday. Our day type was normal variation. We broke the IB to one side. Our opening swing high 71.50, opening swing low 66.75 for a 4 3/4 point opening swing. Our initial balance high 1676.75. Initial balance low 1666.75, just above that key CLVN at 1665.75 for a 10-point initial balance, so slightly larger than the norm between 6 and 9 points. Our 1230 number was lower, 1678.25. Our RTH high, 1681, was lower. Our RTH low was lower at 1666.75, and we closed the RTH at 1678. And our VPOC shifted lower at 1677 again, except for that one day where we kind of held the line and barely closed in green. We've been trending down on the RTH numbers. Our range 14 and a quarter in the RTH yesterday, which was the full session. Our Globex range 6 3/4. Our full session high 81 was put in the RTH, as well as our full session low at 66.75. 20-day ATRs are running 13.3 RTH, 15.3 full session, and 7.78 in the Globex. Our Globex opened last night 1678.50. Our European cash close yesterday 1675.75. Our value area high 79, value area low 73 for 6-point value area. And again, our value areas are continuing to get lower. We broke the IB to the high side just inside the pocket at 940. Our extended session high 79, extended session low 76.50, and our ETH close settlement price was 78.75 for a 2.5 point, which is running, was fairly large considering our 20-day ATR for the ETH is 1.5, and volume was heavy at 1.8 and 2, which is expected because it was a quarter end. So people were exiting their positions. Going to the daily report, nothing really changed in any of the CHVNs or CLVNs or microcomposites. A minor tick here or there. The significant LVN from yesterday's intraday profile, 69.50. We'll go through the naked crosses, but we took out 70.25 and 73.25 and added 75.25 and 76.50. There was a couple that were put in overnight that we'll add, and then we didn't take out any naked VPOCs. We added one at 16.77. News. Of course, the big headline news is the government shutdown. So we have government shutdown, and we'll have to deal with all the news that's coming out there. I think it was more or less priced in that it was going to shut down. The other factor you've got to think about is even though the government shut down, it is the first day of the quarter. So you've got all your fund managers that are going to be getting into their position. So I think we're going to have a somewhat rotational day with a downside bias. Only big news this morning, other than the headline risk, is the ISM manufacturing. We had total vehicle sales coming out during the day, but it's really going to be the headline risk coming in from the government shutdown. All right, so going to the macro to the micro, the next thing we like to look at is where we are within the trends within the different time frames. Monthly, very strong, good slope and separation on the 9 EMA and the 20 SMA. Prices paralleling the 9 quite nicely still, and we're trading in the upper distribution of the prior month. Going to the weekly, we had that first sign of weakness coming in with the close below the 20 SMA, which was the first close all year below the 20 SMA, so it was showing us weakness. Then we had the island top that's set up with the gap below this week. So we are seeing some signs, possible head and shoulder. We're losing some slope, but we still have separation. So overall, the weekly has gone to indecisive in terms of the trend with a slightly upward bias. Going to the daily, well, the daily is coming down. We're starting to roll over, and we're coming into an MA cross. We closed below the 20 and the 9 the last 2 days. Yesterday, and so far we're trading below it today. So we are at a decision point right here on the daily. Going over to the geometric chart. Again, the modified shift chart fork that we put in a couple weeks ago. And then the opposing downward sloping fork has created a couple interesting energy points. The most interesting one is this one down here at 1653, 1654 area. We've got one just above us at 1710, but we are trading below the center line of the modified upward sloping fork and looking to come down to test the lower fork, as well as come off of the top line of the downward sloping fork to test the center line, and that brings us to the energy point, and that's the major target that I've got. As long as we trade in this lower channel, I'm expecting to come down and test this 53-54 area. In fact, we've got the 4-hour chart that we were looking at that still has a valid head and shoulder pattern on it, with the measured move down to that 48 area. And we know why that's important, because we've got a naked microcomposite VPOC down there at 47. So going to the intraday, the 4-hour is still showing us that the trend is to the downside. We're trading below the 9 EMA right now, but we're losing some slope. But we've rejected off of the 20 SMA and came right back down below and trading below it right now. So it is looking weak on the 4-hour. Going to the 30-minute, got a bit of a rollover happening here. We've got an MA hug. We are trading below the 9 and the 20, and we've rejected the 9 and the 20 now in the last 60 minutes twice, and currently below. So they're still looking at weakness on the intraday trend. Going over to the composite, well, yesterday we talked about the fact that we were opening out of range and that we were likely going to chop around between this 80 and a quarter, 78.50. 78 and a quarter was our half gap fill. We went and filled the gap, went right up to the 80 quarter, tried to break into the value area low from the microcomposite for the previous 5 days, rejected that, came back down, and then we played ping pong, which was our main hypothesis. And we, in the beginning, in the morning, we went down and tested that, 65, 75. Didn't quite get to we got within a point, and the buyer stepped in, and we just chopped around in the distribution. I'm expecting a whole lot of the same today. I'm expecting chop between the 80 and a quarter, 78.50, 75, possibly try to come up and test this 83.50 again, the other side of balance. But if we do find weakness, I'm expecting a downward, bias today to possibly 71. 79, but I'm not expecting, as I mentioned before, I'm not expecting to get out of this zone, within the next day or so, simply because of the fact, unless we get some major, news happening. We've got undetermined fair value here. We've come back down. We're now trading within the microcomposite from where we launched from, with the most accepted price being 75. But as we came forward and prepared to launch, that had shifted up to 80 and a quarter. So these two numbers, 75 and 80 and a quarter, are extremely important, and 78 is right in between. So expect a lot of chop. Keep it light, keep it tight. Let's take a look at what's happened overnight. Move our numbers over. So we have a high so far of 84 and a quarter for overnight high, which is just below the naked VPOC at 85 and the naked close at 86.50 and the range high at 87 from the prior day. The overnight low is at 76. So that's just below the naked VPOC from yesterday. Is it 76 even yet? And then current microcomposite VPOC, overnight VPOC, is 78. And that, we might get a shift depending on how much more we trade around the 78.50, but currently it's at 78. So we'll move that over. And it's just right there at that 1678 LVN from yesterday. So we've got value area high at 79, value area low at 73. We've got a major target down here at 77 and 76 with the CHVN at 75. We've got an LVN at 74. So I'll be doing business down here at 74. I'll be doing business at 79 area if we get above it. We've got the naked close at 78 and above us we've got the 81, so I'll be doing business around there, really between the 80 and a quarter and 81. And I'll have to watch as it comes in. And then we've got the overnight high above us. So, if we open in this upper distribution, I'd be, looking for either, the buyers to come in and come up and immediately, try to come up and break and hit that 80 and a quarter again and break out of the 81 to take us for a run, trying to get back into the prior microcomposite and upper balance area and go and take out the overnight high. But you'd be looking for positive responsive sellers stepping in here at between 80 and a quarter and 81 for rotation back into take out or come in and get back inside of the value area and then come down and take out this naked VPOC at 77. We actually just came down a little bit. If we open up in around the VPOC, then I'd likely look for the sellers to step in, try to take us lower, back down towards that 75 CHVN and former microcomposite VPOC, and take out the overnight low with the first support coming in, just between that 75 and 74 and a quarter. And I'm going to actually move this up a bit because the buyers might step in at 75, but they've been pushing through quite a bit. The lower LVN you want to keep an eye on is the 73, just above the value area low. 73.50 value area low 73, and then if we can get through that, we've got the minor CHVN at 71, just above the key CLVN or key LVN from yesterday at 69. So that's going to be a trade area for me as well. And then if they break through, they'll go for the range low at 66, and we've got the CLVN at 65.75. That will be a trade area for me between the 65.75 and the 66.75. I think that if they go through, they'll push through to the 65, and that's where I would expect possible buyers. And then the big area below us, is the 63. We have the 63 naked VPOC with the gap close at 63, and also what was a former microcomposite VPOC from that balance area, which was part of the launch for the first move up to make the new high, which was at 1705, adjusted to the September contract at 1695. So they launched from that 63.75 to go and make an all-time high, and what was the year high at 1705, adjusted to 1698. Below that, the other side of balance is 60.50. And if we get below that, the big target below, as I've been mentioning, is this microcomposite VPOC, naked VPOC at 1647. Plus we had the former microcomposite VPOC at 48, and we have the head and shoulder measured move down to that area as well. So that's what I'm looking at in terms of trading today. But again, I'm looking for more or less rotation in between that 75 and 80 and a quarter. If we could take a quick look at the Keltner with the Renko, a test of the center line will give us 80.50. A test of the lower line will give us 74. So that gives us that move down to take out the naked VPOC and the overnight low and test that 75. Possibly go a little bit lower down to test the value area low at 73, which would give you your test of the lower Keltner line. If we get back above the center line, above 80, then you got to move up to that 86.50, and that will bring us in to take care of the the gap, the naked close above the naked VPOC at 85 and the overnight high at 84. Take a quick look at gold. Well, my number has been 1284.90 down here. I got long twice this morning and then got stopped out for 11 ticks each. and we're currently trading 12.95. I'd imagine they're probably going to give us one more push down to this 84.90, but I'm expecting this 84.90 to hold and a rotation back up into the 1300s. First target above is going to be this 1309, which is the upper distribution of the smaller microcomposite where we launched from, and the value area low from where we just fell out of, with the main target above at 1325.30, and then the value area high at 1340.60, with the long extended term target that is where I'm looking to get long from, get long and hold to, is up to this 1386.90, 1388 area, which is in this larger distribution where we held value before we fell down to this 84.90. So I'm looking for a round trip back up to prior balance that we fell out of, and that we've been, we worked our way up and then fell back out of. If we do get below 1284.90, I'd be looking for a move down to test the other side of balance at 1262.50, and then we got a lot of undetermined fair value in between 1200 and 1250. So I imagine we'd come down and chop down in this area again. But again, I'm anticipating that 1284.90 will hold. We might get a push through to 1275, but I think they're going to hold and try to get back up into the 1300s today. That's what I've got. Howard, over to you.
Thank you, Doug. So let's take a look at our market breadth to start with, since that's the chart I have up. Looking at the sectors, generally the sectors were a little bit lower yesterday, and there were a couple that were more flat, but we did have that gap down. We never did fill the gap, so the day was lower on the day. You can see we have a red candle that's hollow, meaning that it finished with a close higher than the open, but the close was lower than the prior day's close, so that makes it a red candle here. So let's now look at our Dow Industrials versus transports. We see that they're still pretty much moving in sync, so nothing really significant to observe here. So this middle chart is the advanced declines, and the lower chart is the up-down volume. We can see that on a 10-day average for both of these that they're still continuing lower along with price. We're still in advanced declines above the midpoint, but just barely, on both the NYSE and the NASDAQ. In the up-down volume, the NYSE is showing more weakness than the NASDAQ and has now broken below the midpoint, so there's now more net down volume than up volume on a 10-day average basis for the NYSE. The NASDAQ is still a little bit above the break-even at 50%, of 50%. So breadth continues to get weaker along with price. Now we did have 5 days of price in a row lower. That's the first 5-day decline we've had this year. We've had a few 4-day declines. The magnitude of the decline so far has not been as significant as some of the prior corrections that we've seen. So even though we had more red days in a row, the overall magnitude is has not been as severe, but it looks to be a little, still a little persistent. So we'll see how low we go, as we can, well, we can see that in the daily chart when I bring that up. So let's take a quick peek at the monthly. In the monthly we have this pretty close to a shooting star. The body may be a little wide to be a shooting star, but it's pretty close. And we're just starting a new month here. So the key for this month is whether we have continued follow through and close below the low of this shooting star or not. For the week, we did have a shooting star followed by a bearish engulfing, and we had a gap down, so we have a little bit of an island top here. Thus far this week, we tested the 9 EMA here in red. So far rejected it. We're just sitting above it right now, so that'll be a key support level. And below that we have the 20 SMA down around the 1656 to 57 area. Looking at the daily. So for several days we were challenging the 9 EMA, had actually one close above it. The next day closed back below it and tested and rejected the 20 SMA. Then yesterday we had the gap lower and the gap below the 20 SMA and closed below it. We're getting ready to get a 9 EMA 20 SMA cross here on the daily chart. And this cyan dashed line represents the 50 SMA, which we actually tested yesterday and then closed back above it. Right now we are back to testing it. So in the Globex session we tested it, did not go below. Now we're pretty much at our near our Globex lows now and testing the 50 SMA on the daily again. So that'll be a key support level for the daily. So with that, Doug, I think that's all I've got. Turn it back over to you. Looks like about 13 minutes before open.
Sorry, Howard. Thank you. I was just I got long gold again, so I just got mesmerized watching it. We do have a. Let me just switch over to my screen. We do have a tech gap. You don't see the 9 EMA, but we do have a tech gap FUBAR Mr. Sneaky right at this price level, and this is where I anticipated the buyers to come in at GC. So I'll be working aggressively this morning to hold this position. I just got back in at 95.50. I got funded at 96.50. And I'm holding. And if I get stopped out, that'll be my third entry. I got 11 ticks on the first one, 11 ticks on the second one. I've got my stop at 95.60 right now. So I'll pick up another 11 ticks on this one, or I'll hold, and this will be a swing long on gold for me. Anyway, this is going to conclude the morning market review and trade plan set up for Tuesday, October the 1st, 2013. As always, trade well, trade safe, and we will catch you on the flip side.